Hello everybody. Welcome to the video on Accounts Payable interview questions and answers from Career Right. Accounts Payable professionals are hired by a wide variety of companies across different industries. Some of the common ones being large corporations, retail and e-commerce, manufacturing firms, healthcare organizations, construction companies, hospitality and tourism, government agencies and NGOs, tech and finance companies, educational institutes, energy and utilities, transportation and logistics, etc. So, if you're someone interested in AP, know that this domain can give you some really good career opportunities, provided you're prepared to grab them. In today's video, let's see some very important conceptual and general interview questions on AP that can help you crack your next interview. So, if you're really serious about cracking your next interview, make sure you watch the complete video without skipping any parts of it. Ready? Fantastic. Let's start. Question number 1. What is accounts payable? A very basic and much expected question. So, accounts payable is an accountant company's general ledger. It refers to the short-term obligations or debts a company owes to its creditors or suppliers. This typically includes items like supplier invoices, legal fees, contractor payments, etc. Now pay attention. AP appears as current liability on the balance sheet. If AP increases over a period of time, it signifies that rather than paying the bills, the company is buying more goods or services on credit. If AP decreases, it signifies that the company is paying its obligations at a faster rate than making the new purchases on credit. Management of accounts payable plays a very important role in management of cash flow in a company. So you see, a little detailed information is what I've tried to provide here, because it is this extra but relevant information that makes you stand out from the crowd, which is exactly what you want during the interview. But to be able to do this, you need to be well prepared. You need to anticipate the questions and you need to prepare your answers well in advance. Okay, let's move on to question number 2 now. And our question number 2 is a little tricky one. Many candidates commit a mistake here. The question is, are accounts payable business expenses? Some people tend to mistakenly believe that accounts payable refer to the routine expenses of a company's operations. But that is an incorrect interpretation of the term expenses. Expenses of a company are found on the income statement, while if you try to find payables, you'll find them booked as a liability on the balance sheet. So no, accounts payable are not business expenses. Question number 3. What is accounts payable turnover ratio? Now, the accounts payable turnover ratio is a measure to quantify the rate at which a company pays off what it owes in the short term. The formula to calculate accounts payable turnover ratio is this. A decreasing accounts payable turnover means that the company is taking longer to pay off its supplier in comparison to the previous periods. Now, the question arises, what does this indicate? So, according to me, it could indicate two things. The first one is the company is in financial distress. That is why it is paying off slowly. The second thing it could indicate is the company has negotiated better payment terms with its suppliers. On the other hand, if AP turnover ratio increases, it means that the company is paying off its suppliers at a faster rate than in the previous periods, which is an indicator of sufficient supply of money. However, this can also mean that the company may not be reinvesting in the business sufficiently, losing out some good opportunities, which could put it in the problem at later stages. So actually both of these things, if you see, they need further investigation. That is why this ratio is very, very important. Moving on to question number 4 now. What is the difference between accrued expenses and accounts payable? Another important one. So accrued expenses are basically expenses that a company has incurred but is yet to pay and record. For example, salaries that it has to pay to its employees. On the other hand, accounts payable are amounts a company owes to the suppliers for goods or services it has received and invoiced but not yet paid. So if you notice carefully, accrued expenses are generally the obligations within the company, while accounts payable are obligations to external parties. And this is a big difference between the two that you must pay your attention to. Let's move on to our question number 5 now. What do you understand by accounts payable subsidiary ledger? Now see, an accounts payable subsidiary ledger is an accounting ledger that shows the transaction history and amounts owed to each individual supplier and vendor. So you can say basically it shows a breakdown of the total amount of payables listed on the general ledger. Let me explain it to you with the help of an example. Let's say Maruti Suzuki as a company has a general ledger balance showing total AP balance of rupees 50 million. Now, the management may want to see how much money do we owe to whom. Where should they look for it? They should look for it in the accounts payable subsidiary ledger. It would show them something like supplier A is owed rupees 5 million for gearboxes. Supplier B is owed rupees 7 million for leather covers. Supplier C is owed rupees 15 million for tires and so on. So you see, this is a breakup of the accounts payable, and that is what you find in the subsidiary ledger. Now, our question number 6 is regarding a very important metric that is used in accounts payable. And the question is, what is days payable outstanding? To answer this question, you can say, days payable outstanding, which is also referred to as DPO, is a metric that indicates the average number of days a company takes to pay its bills and obligations. If the DPO of a company is high, it indicates that the company delays making the payments. It may be using the available cash for short-term investments or increase in its working capital and free cash flow, or it may be under the financial distress also. Depends on the situation. Okay, so that is why this metric is very, very important. It is one of the KPIs on your report sheet. Okay, now our question number 7 tries to dig a little deeper into DPO. And the question is a high DPO always a positive sign? So no, while a company would like a high DPO, it is not always a positive sign. If a company is taking more number of days to pay off its dues, it could indicate a cash crunch also. At the same time, it may lead to stressed relations with the suppliers also. But having said all these things, large companies with more power are usually in a position to negotiate better payment terms and may have a high DPO. So basically this is a figure that needs further investigation depending upon the size of the company. You can't straight away jump to any conclusions as such. Moving on to question number 8, which again tries to test your concepts. What type of an account is accounts payable? So accounts payable is a real account. It has a continued existence from one period to the next. The documents here are real. So accounts payable is a real account. Moving on to question number 9. Name some critical documents involved in accounts payable process. This is pretty simple. Some critical documents involved in AP process are purchase order, purchase requisition, invoice, goods received note, credit memo, aging report, vendor statement, etc. This is simple, but just be prepared to have all these names on your mind when you are actually facing the interviewer and trying to answer the questions. Moving on to another basic question, but a very important one. What is an invoice? Is it a bill or a receipt? So an invoice is a document that carries a record of transaction between a buyer and seller. It carries details like date and time, unit cost of items, total units purchased, shipping or any handling cost involved, taxes, total amount payable, payment terms or anything else both the parties have agreed to during the negotiations, etc. Now each invoice has a unique identification number on it, which is also called as its invoice number. For a payment to be made, the invoice must be approved by the responsible person in the management. Now, if you look at an invoice, it is generally used to document the products or services that have been sold and delivered to a customer. So what is it? It is a bill. It shows that the payment is owed. However, if you look at a receipt, a receipt would show that the payment was received. So, do you see the difference? Make sure that such basic things are very clear in your mind. It is not the big things that cost you the opportunities. It is not knowing such basic things that is a bigger problem. So, it is very, very important that you brush up your concepts and prepare yourself to answer such basic questions very well in the interview. Moving on to another basic and important conceptual question. The question is, what is the difference between a purchase requisition and purchase order? Now, these are two often confused documents. So, as I said, this is another important question. Listen carefully. When the internal teams of a company require certain things like stationery, supplies, or anything else, they fill up a requisition form, which is called as purchase requisition form. It needs to be approved by the management before the purchases can be made by the purchase department. So, do you see? This is an internal document. On the other hand, when the purchase department wants to order certain goods or services from a vendor, they issue a purchase order. So, this is the basic difference between a purchase requisition and purchase order. And again, this type of things must be very, very clear in your mind before you go to face the interview. Question number 12. What is the difference between a PO invoice and non-PO invoice? Now, you would notice that in the usual purchase process, buyer sends a purchase order to the seller to make a purchase, based on which an invoice is generated and the order is delivered. But many a times, if a company requires anything urgently, it may just call the vendor instantly and request them to send the goods. Here, no PO has been raised yet. So, the invoice coming in would be non-PO invoice. So, do you see the difference? Non-PO invoices are generated outside of a formal purchase procedure. Okay? Now, let's come on to another commonly asked question. What is a GRN? So, first of all, as you would already know, GRN stands for Goods Received Note. When goods are delivered, the store manager of a company acknowledges the receipt and acceptance of goods by putting his signature on the GRN. So, it is the buyer who sends it to the seller. Pay attention, because a question can come from here also. It is the buyer who sends the GRN to the seller. Now, what is the use of this GRN? First of all, it validates the quantity and quality of the goods that have been received. Then it works as a record for the future to resolve any disputes between the two parties. And it also helps in inventory management and accounting also. So, this is a bit of information about GRN that you must be aware of to answer the questions on this topic. Let's move on to question number 14 now. What are duplicate invoices? How do you avoid the double payment? Now, duplicate invoices or making the double payment can be a serious problem for any company. The invoices that are mistakenly processed more than once within the account payable system are called as duplicate invoices. First of all, let's make this clear. Now, to avoid double processing of an invoice, it is very important to have a centralized system in place for the entry of invoices so that no invoices are entered twice. Then it is also very important to have an approval workflow. Conduct regular audits so that you can identify any mistakes at the earliest and correct them. It is also very important to have a trustworthy relationship with the vendors so that they themselves report such discrepancies. Now, some of you might wonder, why would a vendor get back to say that they have received the same money twice? But let me make it clear, good vendors actually do it to maintain a good relationship with the buyers and for a continued long-term business with them. They may cheat once, but they will never receive the business again. So this is a business ethics thing. That is why they would definitely come back and report it. Question number 15. What do you know about invoice aging and invoice aging report? Now, invoice aging is actually the process of categorizing and tracking outstanding invoices. That is, the invoices that are overdue for the payment now. You then prepare a detailed report that shows the invoice details along with the aging bracket. Like, this invoice is overdue for 30 days, this is for 60 days, and so on. This is invoice aging report. This kind of an aging report lets the company know its outstanding liabilities which helps it in planning the finances, making the decisions regarding the payment, and managing the cash flow, which ensures timely payments. Any good business knows the importance of clearing the payments on time to maintain good relationship with the vendors. And that is where invoice aging and invoice aging report play a very important role. Okay, now our question number 16 is an interesting one. Pay attention. Which process is bigger? Procure to pay or accounts payable? Now see, procure to pay or P2P is an integrated process that covers the full cycle of activities involved in acquiring the goods and services from external suppliers and actually paying for them. So as you can see for yourself, accounts payable is just a small part of this whole process. So definitely P2P or procure to pay is a bigger one. Moving on to question number 17 now. What is two-way matching? Now, two-way matching is a very basic control mechanism in AP to ensure that the company pays only for the goods and services it has ordered. This is done by matching the details on the purchase order and invoice. The details you match are quantity, unit price, and total amount. Two-way matching ensures accuracy in payments and prevents any possibility of frauds. Okay, now like two-way matching, you have something called as three-way matching also. And a question may arise from here also. And the question can be, how is three-way matching different from two-way matching? So to answer this question, you can say, well, the basic difference between the two is in three-way matching, there's an additional layer of security to ensure the accuracy in payments made. Here, in addition to the PO and invoice, you also check the GRN, that is Goods Received Note. It ensures that the company pays only for the goods or services it has ordered and actually received also. Question number 19. What is debit balance recovery? Now, we discussed a while back. If a company by mistake pays an amount more than the invoice, it needs to recover that money from the seller. This is debit balance recovery. Okay, now let's move on to some questions related to the management of AP. And the first question that we have got here is, what do you know about AP segmentation? Now, AP segmentation refers to the process of dividing accounts payable into different categories or segments to manage and analyze them more effectively. What it does is, it helps you in avoiding mismanagement of critical AP. AP segmentation ensures that the critical suppliers are paid on time. There could be various criteria for this segmentation. The first one could be vendor type, such as this person is a supplier of raw material, supplier of critical goods, or which category does he fall into. The second one could be the payment terms. For example, we have negotiated a payment term of 30 days, 60 days, 90 days with this supplier, and let's categorize them accordingly. Then your classification could also be based on the geographical location, so that you can operate as per the regional regulations, cultural differences, and time zones, etc. Your fourth criteria could be the contractual obligations, such as long-term contract, one-time purchase, etc. Now see, once your payables are classified, you would clearly know paying out which invoices early can give you the advantage of early payment discounts or help you avoid the penalties for late payment. At the same time, it prepares you to comply with regional regulations for international vendors also. So the advantage of this segmentation is it leads to better cash flow, stronger vendor relationships, and improved operational efficiency. And that is why AP, like any other department, pays a lot of attention on managing their accounts. Well, AP segmentation is a way to manage those accounts. Okay, now let's move on to one of the most important questions asked during an AP interview. And the question is, what are the different criteria used to prioritize the AP? Now, there are various criteria based on which you can classify and prioritize your AP. This can include things like, number one, due date, that helps you avoid the late fees. Then there could be early payment discounts. You may use this criteria also, so that you can save some money by paying before the due dates. Vendor priority, depending on how critical the supplier is. Then your criteria could also be invoice amount. so that you can manage larger invoices first for significant cash outflows and align the payments with the available cash. Your payment terms and regulatory compliances could be another criteria so that you can adhere to the agreed upon terms, and also if there are international sellers involved, you adhere to the compliances also. Dispute resolution to resolve any invoice discrepancies before the payment could also be a criteria. Then the history of the vendor could also be a criteria in many cases so that you can maintain a good relationship with your reliable vendors. Critical business needs. This is very, very important. Critical business needs. You always try to pay for essential goods and services first because without this material, my business cannot run smoothly. So you see, these are the different criteria that you use to prioritize your AP. Okay, now our question number 22 is a pretty simple one, but all of these things that are mentioned in the answer here may not occur to you on the spot. That is why it made sense to have it on the list here. And the question is, what are the different payment methods used in accounts payable? So the different methods that are used in accounts payable include things like checks, EFTs, ACH payments, that is automated clearing houses, wire transfers, credit cards, purchase cards, which you also refer to as P cards, PayPal, and other online payment services, virtual cards, etc. The correct choice of method can boost efficiency, reduce costs, and help in maintaining strong relationships with the vendors. So you can pause the video here and just take a quick look at all these options. Okay, now our question number 23 is again a very important question from the point of view of managing your own performance. And the question is, what key metrics do you track in accounts payable and why are they important? So some of the most common metrics used to track AP performances are: number one, days payable outstanding, that is DPO, as we discussed just a while back. This indicates the average number of days a company takes to pay its invoices. A higher DPO can improve cash flow, but excessively high DPO might strain the relationship with the vendors. The second one is accounts payable turnover ratio. This also we discussed a while back. It measures how many times a company pays off its accounts payable during a period. A higher ratio indicates faster payment cycles. The third one is invoice processing time. It indicates the average time taken to process an invoice from receipt to payment. Shorter is the processing time, better is the efficiency, and the chances of penalties due to late payment also reduce. The next one is invoice exception rate. It indicates the percentage of invoices needing manual intervention on account of discrepancies or errors. A high exception rate may indicate issues with the procurement or invoicing process. The next one is percentage of invoices paid on time. This is an indicator of good vendor relationships and payment penalties. The next one is discount capture rate. It indicates the early payment discounts that you were able to actually utilize. It helps in maximizing cost savings by taking advantage of early payment discounts offered by the vendors, and any company prefers that. The next one, as you know, is a very important one, and it is AP Aging report. This is a report that categorizes accounts payable by the length of time an invoice has been outstanding. The next one is payment error rate. Payment error rate indicates the percentage of payments with errors in them. Example, overpayments, underpayments, or duplicate payments. This is again an indicator of what? It is an indicator of accuracy. Number of supplier disputes you have could be another metric. This indicates the total number of disputes with suppliers over invoices or payments. It again indicates accuracy and reliability of the AP process. Lesser the number of disputes, better is the vendor relationship. So this is a very, very important question. I can't stress more on this, but be prepared to answer this question very effectively. If need be, you can pause the video here, or you can just replay this much part of the video to make sure that you have caught these things well, because this question is definitely going to be asked to you. And finally, moving on to the last question for today's video. And if you really want to work for a big company, an MNC, this question is going to be definitely asked to you. What are the major challenges in managing accounts payable across multiple international locations? Now, see, if the company is big, if it is a multinational company, it is definitely going to have vendors and offices across different geographical locations. Managing accounts payable across multiple international locations can be a really challenging task. The challenges are usually related to a difference in the number one, currencies, because fluctuating exchange rates may make the transactions costlier. Then, regulatory compliances play a major role here because this could mean a difference in tax laws, regulations, and reporting requirements also. Time zones play a very important role here because they could lengthen the payment cycle. Banking systems in different countries are different, which may mean a difference in the payment methods, transaction fees, penalties, etc. Security of transactions may be at a risk depending on how advanced the country is technologically. And lastly, the cultural difference between the two countries may make the communication and negotiations difficult. So, these are some of the major challenges that the accounts payable people working in international market face. But see, as I have been saying since the beginning, these type of things don't occur to anybody on the spot until and unless you have a lot of work experience. So it is always better to brush up your knowledge. Always better to anticipate the questions and be prepared to answer them. Very soon I'm going to get you a video on accounts receivables also. If you are interested in that part of the domain, make sure that you watch that video also. I sincerely hope that today's video was useful to you. If it was, make sure that you give it a thumbs up and share it with your friends also. For more such videos, subscribe to the channel now. I'll see you very soon with a new one. Till then, bye-bye and take care.